when we think of fintech, right, I mean, the companies that immediately come to our mind are Paytm, PhonePe, lending card. And you wouldn't be surprised that people are coming up with these examples. These are stalwarts, and in many ways they've achieved a great deal of development and disruption in the spaces that they operate. But fintech is much larger than just payments and lending. So I have a list of what the entire gamut of fintech means. Let me see if I can read it in one breath. It's regulatory technology, personal finance, wealth management, lending, financial software, insurance, real estate, with the application of frontier technologies like blockchain and technologies that are going more mainstream, such as AI, ML, and data analytics. Whew. So to discuss this future in more detail, I decided to get some of the smartest minds that we can think about from all walks of life, especially from the startup, investment, and also from the government angle. I would like to invite Anuradha Ramachandran, Investment Director of Omidyar Network, to please come onto the dais. Have a seat, ma'am. Ruchi Deepak, co-founder of Acko, and Suniti Nanda, Fintech Officer of Government of Maharashtra. Thank you so much, ladies, for joining us here today. It's a long list, isn't it? Not just payments and lendings. What do you think, Anuradha? What are you seeing happening in the ecosystem today?
So, for a while now, we've been conscious of the fact that, like financial products, which is like lending or insurance or payments for that matter, have started slowly disappearing, right, from the lexicon of investors by themselves. We no longer think along those lines. I think from Karen's speech, it was actually, like nobody wakes up thinking, today I want to take a loan or today I want to buy insurance, right? Like it's just what are your life's needs, and therefore like how are you using different kind of instruments to or financial instruments to kind of meet those needs as such. So as we move through the, as we are actually like seeing life evolve through the millennium, we are seeing that people actually like are using those products which are embedded to them. They could be chatting with friends and doing like transactions, P2P transactions with them for all we know, right? So it has moved away from that concept of actually like being product-led to being conversation consumer-led, right? And I think that's the kind of frontier that we are now calling, we can call them neobanks, we can call them neo-insurance, we can call them anything. But ideally, it is about the focus being shifting away from products or financial products to actually the consumer needs and how are they being serviced as such. So that's typically like what we've been looking at for the last couple of years. And I'm like actually very, very happy to see that there are quite a lot of startups in India who cater to this kind of thinking.
So that's very interesting. Ruchi, like your startup, Acko, is very much consumer focused. So in a certain way, you're already stepping into the next wave of the fintech revolution, right? But let me just ask you a cheesy question here, right? Why did you go after the segment that you did when there are a million other ideas that you can choose from?
So if you're asking me about my choice of the startup, the sector that we chose, I think there is maybe a more sort of public answer and there is a personal answer to it.
We demand the personal answer.
Personally, I was looking to do something extremely challenging, and when Varun, who's my co-founder, he spoke about it. He was running CoverFox, when he spoke about the idea. Of course, for me it was just out of the blue, right? I had never bought an insurance in my life before that. And here I was discussing about, starting an insurance company, which till now, I mean, till before Acko, was probably a game of sort of more established players. And it was very, very sort of structured and heavily regulated. And getting a license itself was extremely sort of, so the most sort of arduous journey ever. So for me personally, of course, that was a challenge. And when we started off, there were, of course, those sort of, you had, people would give you those looks, right, that what you're trying to do. But anyways, I mean, that's past. So that, looking at the sector, nobody had really touched it, right? And you knew that it was extremely difficult for the incumbents to do anything because they were already kind of, part of a certain strategy, a certain business model, which was pretty much intermediary-led, right? To sort of, integrate tech into a model like that, I mean, it's just not possible, right? And you knew that, I mean, everybody talks about fintech, everybody talks about insurtech, but it's just that, there's a huge entry barrier of getting a license. So, I mean, we decided to try it, and we realized that there is a huge, huge opportunity because today, for example, what we try to do, right? I mean, we try to design extremely sort of relevant and bespoke products for the customers, right? Something that actually makes sense in terms of their day-to-day life, right? Let's say, for example, the Ola insurance that we have, right? It's priced at ₹1, it's easy to buy. So some of those things, so we knew that the opportunity was massive and our DNA was technology. So we decided to do it. That's
Excellent. Suniti, if I have to pivot that question a little bit towards thinking about the financial inclusion angle, right? A lack of insurance could actually make or break actually, somebody's bank, essentially, if they have to go to a hospital or if they have any other needs, which are not covered under the insurance. I know as part of the government of Maharashtra's initiative, it set out to make Mumbai a truly global fintech hub, right? Financial inclusion is a big part of your concern. How do you see the application of technology to bring about the financial inclusion?
So whatever you said, I think you kind of touched upon every critical aspect. So in line of financial inclusion and to your topic, beyond lending and payment, things are actually related. For where we stand, financial inclusion is of course the most important element in whatever we are doing right now. So like the Mumbai Fintech Hub was created with this thought that we would like to bring in a change by impacting the fintech sector, and this is the sector which can actually revolutionize the financial inclusion bit of it. Payment has moved, lending has moved, but it still has not solved the credit problem for the last mile. So if you say like things have to be beyond, so the beyond, even in the same sector, we have to look at that that mile. Even forget about the underbanked, even the underserved are the ones the lot has to be done. So that part, and additionally insurance, the way you said, that is so much, the whole livelihood, if you take that sector, it is so much into it's a habitual change, it's a cultural change. There's awareness about it that is not there. So that can be clubbed under financial literacy part of it. And the need, of course, is there, that we need it. I mean, it has to be solved, it has to be done. So now how it can be done, or how that credit can be solved, or how savings can be solved, or how financial literacy can be probably done in a better and effective way. For my knowledge, we strongly believe that technology can do that, and we strongly believe technology is that accelerator. And probably that's what is the fintech sector for us. The reason in addition to the startup policy, if we really need a focus on fintech, it is because that sector can actually bring in that change. Banks have been there, insurance players have been there, the way she said. Everything has been there, but then the problems that have been there are also been there, right?
Yeah.
Along with the mandates we have been there, but the real problem has not been solved. So this new sector can actually solve that problem with the real change coming from governments, regulators, and of course the new age technology solutions that are coming through. They can bring in that movement.
Right.
That's how we look at it.
Right. So I think it's very interesting that you mentioned that there's a lot of education that needs to go into helping the customers realize the importance of insurance, right? India is notoriously underpenetrated when it comes to insurance. Just 3.7% of the population has private insurance, that is. So how do you bring about a change or even a disruption in this area, Anuradha?
So, one of the things that we realized about financial literacy is that in the abstract, so if you go and educate a person how to buy financial products, right, it's of great help At that point in time, people will find it very interesting. Probably, like it's novelty value for them. But ask them a few weeks later, and most likely it would have just slipped from their minds, right? Like situations actually like change people and their thinking. Nobody is looking very statically at this is how I got educated and this is exactly how I'll apply it, right? So usually what we found is that literacy works at the point of transaction almost, right? Or at least at the decision point of transaction, right? The idea is that if you're buying any financial product for that matter, be it insurance, be it, like wealth management, I'm just talking about those products which are a little bit less penetrated, where the need itself needs to be discovered sometimes. And not about credit, which is a little bit easier as a decision, right? Like it usually is a buyer's decision for credit, whereas for wealth creation or for insurance, it's actually a push, right? Where you have to educate customers in that context. What is the right point of education? Like, like in insurance, it's a point of an event, right? At the point of an event, you don't tell people that, hey, you should have been insured, right? Like that's like the worst thing that you can do. But post that is probably when they're conscious, has kind of like, they know consciously that this is something that they should have done as such. Right? So the point is that, like in the abstract, it never happens, but like slowly, like getting people used to using things, nudging them to think in certain kinds of ways. So behavioral nudges is actually like something which is a word which is much used and much abused in the financial sector today. But those are the kind of things that really work in terms of building out financial literacy, and not something which is, like especially for the people who are new to this segment. That actually like works much better than actually educating or like creating campaigns around as such.
So there are many operational inefficiencies in insurance, and it's very labor intensive. Do you think that we could really see a DIY kind of a market developing in India in terms of buying either health insurance or life insurance, or even for consumable products?
So that's exactly what we are working towards, is to make this, the sort of the simplicity of it, right? Whether it is the product construct, or whether it is the buying process, or whether it is even the service or the claims aspect of it, right? So what is the problem today, right? The biggest challenge that you have is that the insurance companies do not own the customers. The broker or the agents does, right? The agents will get you to fill a form, and that form will have agent's number on it. The insurance company don't even know who their customers are. And when you don't know your customers, what can you really do for them, right? I mean, it's all pretty much driven by the intermediaries. So I think there is a huge scope there. I think the premise that has to be there is that you have to keep it simple, right? When you make it a very, very sort of complex, jargonized, financially jargonized product, it's one the consumer don't understand, right? The buying process is painful, right? You have to sit and fill up a form, you have to like provide some data. There is just, and the underwriting itself is just very, very standardized. There is absolutely no personalized underwriting that happens. So yeah, absolutely, I think the sector is waiting to be disrupted more. This is just the tip of the iceberg, and we will see hopefully like, more sort of action happening there.
Right. So let me switch the gears a little bit here, and let's look at wealth management, right? I mean, today it's all about angel investing, and we've seen the likes of Mohandas Pai, taking a jab at probably, maybe some of us sitting here in the auditorium, that keep the small guy small, right? So if you look at wealth management as such, I mean, just doing 3% of the household is in any type of financial assets. Everything else is in either gold or real estate, or the millennials, you can forget about it. They're hitting 30, 35. They still don't have any planning done in terms of financial security or financial future. So where exactly are we going to see the opportunity for the startups coming up in wealth management? Suniti or Anuradha, one of you might.
Sure. Like if you just look at the social evolution of people, right? Like there is one segment of the current, of the current populace, which came from from employed families who have a long, history of employment, and there was always pension which was provided by the government or their employer, right? So they never needed to think of how do I live my old age, right? Like how do I provide for my needs? Because there was a very set system of how you function in these kind of enterprises as such. So nobody thought about it. And then there was this huge population which was like self-employed, and they had a different set of needs, but even then they figured out certain assets which could easily be collateralized, and therefore use that as collateral for providing, to get access to financial services as such. So that's the only two ways that society had evolved to a very large extent. Right? Nobody thought about how am I planning for, now suddenly we are at a stage where, there's no government pension cover. There's no private, employer pension cover. And you're thinking about oh shit, I'm hitting retirement, what do I do now, right? And everything of yours is so you kind of hold it in bank FDs and so on, right? So nobody is thinking along these lines. So if you look at every life stage, be it the retire, close to retirement or retirees, right? From there, and then working backwards to each life stage till you're a millennial, you just started your first job, right? There is a different kind of a financial need and a different context to wealth management which needs to be created. Everywhere, so for the retiree, it is about how am I managing my monthly cash flows. For the millennial who's just been employed, it's about what do I need to create a financially secure future for myself? How do I make sure that my assets and liabilities are equally balanced? Just try and use this language with anybody and they will just look at you blankly, right? Assets and liabilities are not how they are thinking about it. But fundamentally, what we are trying to do is exactly that. How do you create a healthy financial life for people? And that's what wealth management is all about. It is not necessarily about making you a millionaire. It is actually about how do you manage your life in such a way that it actually becomes very secure. So the audience is actually staggered, right? It's the completely new age, new to work millennial. There is a family equivalent, right? That stage, and then there is the close to retirement and retirement planning stage, the retirees using their financial products well stage. So wealth management has a role to play in each of these stages. One of the assets even in wealth management could be real estate, could be gold, but it is not the be all and the end all, right? So the intent is to make sure that you have a spread of assets, not ignoring one asset class or not overexposing yourself to one particular thing, right? So that's what creates the responsible kind of investing and the responsible kind of way that, you're managing your life's needs as such. Those are the kind of, startups that we're really looking at.
So we've seen quite a few startups specifically focusing on the mutual funds area, right? But do you really think that, notoriously mutual funds is very investor, advisor-driven kind of a space. Do you really think that, startups can actually replace this advisor, customer, client relationship and go and reach the client directly?
Sure, a great question, right? At the end of the day, there is an intermediary. Let's call them just an intermediary. So there's a physical intermediary who's this advisor, and we are trying to replace them with a digital intermediary, right? And the intent, therefore, that you're talking about is that the digital intermediary is likely to be a little bit more objective because there is so the physical intermediary has his own life issues to take care of.
Right.
So what product gives me the best return? How do I actually make sure that I keep on making enough commissions to survive myself, right? The digital intermediary in that kind of a context is saying, this is my customer, here's an algorithm, and this is how I'm going to do things, right? So it's the objectivization that we're really looking at, and therefore creating greater trust in the financial product system as such. So if, mutual funds in a sense have been intermediated, but they've also been only available to a very small set of people. They're actually a smaller set of people than actually underlying shares, right? The equity markets itself. Yeah. The number of people participating in mutual funds is lesser than that. So that by itself is a surprising connotation, right? So it just means that different people with different incentives have been intermediating in there. So it's just a question of how do you make sure that there is the right kind of financial decision which is happening, and therefore how do you create the the trust in the financial ecosystem around. So mutual funds is the beginning of that, and it's a good example where at least you have something to start off with and a fairly robust regulated ecosystem, which is actually in place as well. It is very important. While, usually regulators seem to be pain points for most startups, it's equally important for them to have clear regulation, right? One way or the other. So therefore, that's very important as well, to create trust in the product that they're selling. In that context, actually, mutual funds is a great example as a starting point as such. But we do believe that, this objective kind of advice needs to come from, a non-human interface in a sense, right? When you program the interfaces, you tend to be you need to start looking at those kind of things as well. So yes, we believe that's the future, especially in a DIY context that Ruchi is trying to create as well.
Right.
So we think that is very important.
Right. I think sticking to the regulatory framework, right? I mean, Suniti, you work very closely with the government. Do you see, especially in the financial services segment, right, wherein the tech concept of fail fast and then iterate, right, may not necessarily be seen as a good thing in the context of dealing with people's money. So what do you think from a government regulatory point of view are some of the things that it can do? I mean, there have been a talk of a fintech sandbox wherein you can experiment and do that kind of things, but where are we in that path? No.
All right. So regulatory sandbox is a step forward, is what I would say. And good part is all the regulators actually came on table with a sandbox framework almost at the same time. IRDA's framework is pretty good to say that. RBI also has done pretty well in their framework. So I think if I have to start with RBI, RBI has done a fairly good job. They, even though people in room might have reservations and thoughts around that, but if you look at, that's the one which actually helped multiple advancements in the technology segment, in the fintech segment. You see the kind of NBFC and SFBs that have come through. It's actually solving a lot of those purposes. So fail first is I would say it's a very initial terminology for very early stage ones, and those things can happen in this sandbox kind of stuff. And any of these fintechs who are coming either in the insurance play or in the fintech play, they are not the ones who are regulated to begin with. I mean, unless you really take a NBFC kind of license where you are working. And also failing first could be natural phenomena for that sector and where you are. But when you are a license holder, then it's you are regulated by that terms. But in all this, there is a mindset that is out there that to do things differently and approach it in the right way. So both in insurance and in the other play, knowing that the digital infrastructure that is needed has already been there, and we have seen the kind of movement that have happened in payment and lending, and on top of it, now is the time that savings and insurance kind of play along with wealth management will pick up from here, because I think everybody has seen how changes have. Mm-hmm. Now think of IRDA has been talking about bringing in few changes, which will definitely bring in the right change in the insurance sector. That, I mean, the way NBFC licenses are there, if small play can be done in this sector. There are many things that's under discussion, I think, that will come to market. And the way even to top up this is more around, there are a lot of schemes that are coming up. Let's in insurance, a Ayushman Bharat scheme has come, or a Pradhan Mantri Bima Yojana has come. So if you club all these things together, the infrastructure, the regulatory foot forward, and some of the government schemes, and put these tech players over there, and you will actually see that things are moving forward, and everything will happen there. You're failing first, and the successes, mm-hmm. and the top up is what.
So more like a collaborative innovation.
Exactly.
Got it. Ruchi, was it collaborative for you when you?
No, I totally. I will endorse it. We are running a business in sort of the most heavily regulated, controlled environment. Insurance companies are most sort of heavily regulated entities in India. And I honestly think regulations help us stay grounded, honestly. I mean, I look at maybe sort of other startups or sectors where maybe they don't require so much regulation. They have much more freedom to operate. We don't, but that has worked in our favor. Of course, we are doing a lot of, for example, our mobile insurance on Amazon, or whether it is our Ola insurance, on the Ola app. We work with the regulators to design these products because, at the end of the day, there is sort of, this whole balance that you need to bring in, right? The objective of the regulator is to ensure that, at the end of the day, the retail customer, people who don't understand financial products are protected. Businesses which are, providing these avenues have enough safety nets. So whether it is reserving requirements or whether it is reinsurance, some of those things are extremely helpful. And we've seen IDA, how they kind of liaise with us, how they kind of discuss these things. Some of these things that we are trying to do is absolutely out of the box for them, right? But their enthusiasm to work together, to find that balance, and I honestly, I think I genuinely appreciate that balance because, at the end of the day, you have a huge population that does not understand a lot of these products, right? Whether it is wealth management, investing in the stock market, or any of these things, or insurance, right? So we have to solve that problem, right? And you can only solve that problem with the government. And the government is showing a lot of willingness to do it. I mean, we work with IIDA very closely on some of these things. And the way they've helped us innovate, find that balance is amazing. So, I mean, I think huge opportunity over there.
So, like you said, there's a lot of information for an end user or an end customer to consume and process, right? Spending may be okay, but wealth management or anything else, it's a little too much, right? I mean, where do I borrow? How much do I borrow for? How do I manage my wealth? So I think this is not so much different from what the Chinese consumers have faced in their system as well, right? And then we've seen the likes of Ping An, which is like a financial ecosystem fully replete of everything that you can imagine in itself. Is that the future that we are looking at when we think about future of Indian fintech? Or is it going to be significantly different and we are notorious for being a messy democracy? So is that what you see?
So just towards the end of last year, we came out with a report which I co-authored, and in that I've specifically stated that India is evolving different from China and the US. So I don't think I can go back on that publicly made statement, though contexts are different. But I genuinely believe that personally as well. The way even, like e-commerce has evolved in India, right? Like, and where we are in terms of, so there are 2-3 things. One is that where are we in terms of the economic curve by itself is changing. Where are we in terms of like how our purchases are made? That in, like the e-commerce evolution that we're talking about, we're still thinking about that, right? And then comes the remaining part of all the financial products and so on and so forth, which require a lot more engagement from the customer as such.
Right.
So I don't know that we are making the leap even though like we have seen the leapfrogging in the digital tech actually playing a role. I don't know that we are making the leap that the way that China made it, right? Like yet there are no closed ecosystems for us in general both as an economy. We've not actually like gone that route. We've like gone more for the open APIs and the open regulations and so on, right? Like, so in that kind of a context, as an economy, we've not gone that route. And in terms of the players, we've actually like looked at more, larger number of players catering to different needs of different segments of society as such. And I think that's the way it'll go in consumer finance as well.
So I'll just differ a bit in this, because I strongly believe on that point that somewhere we'll also head towards consolidation for sure. Because in such a large market, multiple players cannot coexist beyond a point. So whether it will be Ping An story, it could be like, Paytm plus a Flipkart plus a Oyo story here, or a Ola, and there will be consolidations. Otherwise, I think the growth of these players will just to be at point. And in all this, we know that who is sitting on data.
Right.
And I think a lot of them will be driving it. Whether we like it, we don't like it, everything is going ahead that. And in that process, even the larger banks, larger insurance players, Now they are also changing their gears, right? So as a large bank, if I change my gear and I consolidate all my stuff and give a single point, the best of the best experience, I already have the consumer trust. So I will always have a leeway in buying a lot of things. So it will fall, I think, somewhere in there. The B2B, B2C fintechs are working with me. We are collaboratively. Then bank could be the face, and there will also be the Paytms and the Amazons of the world who are trying to do that. But then it will definitely somewhere, I think we will see each other that what will actually happen, but for sure consolidation is there in cards.
I hope we will see some signs of it by the time we do this next year. And Ruchi, finally to wrap up, just give us a sense of what to expect from Acko maybe this year.
So we're working on a lot of things. We are looking at more sort of products which have the right market fit, which can be part of the ecosystem, which can ease consumers' journey in terms of sort of the entire start to finish. I think one of the areas where we are very aggressively innovating and trying to build our expertise in is on the claim servicing side, right? Which is very, very broken right now, and extremely sort of the experience for the consumers have been tardy. So that's one space which we still need to like fully crack. So working on the claim side. More sort of interesting offerings, like, looking at renters insurance, looking at more sort of relevant travel insurance, even maybe a divorce insurance, given that the divorce rates have gone up.
So is there any inorganic growth on cards for the company?
Honestly, it's just very difficult to say right now, right? I mean, if I look at what are my opportunities, fairly limited, right? Unless something on the technology and the data side and some of these sort of trying to aggregate my service infrastructure, maybe yes. But I cannot go ahead and acquire ICICI Lombard or HDFC Ergo for sure.
Sure, at least not yet.
Maybe
Not
someday.
yet. On that positive note, ladies, thank you so much. It's been such a pleasure having you over here.